Welcome to Caching Waves. This is an Elliott wave update for XRP. Now in this video I'm going to be focusing on the smaller time frames, but in case you're new here, just wanted to give you my primary count on the daily, and that is, using Elliott wave theory, that we have a multi-year triangle. How this pattern plays out, it's the top left one you see, is we have 3 wave patterns labeled as an A, B, C, D, E for 5 waves within contracting trend lines, at which point we complete the pattern in an E wave, and then we get trend continuation, which in this fact would be to the upside to all-time highs. So this is an idealized view, and this is what it looks like in real time. We have an A, B, C, D, E, in which case invalidation of the triangle would be below the C wave at 2872. So technically we can make a new low, although I don't expect us to. I would like us to hold the 38.23, but not invalidate it until we actually cross over the C wave price territory. Now, if I extend this right, my expectation on this is if we break this trend line to the upside, you can see how close we are, that we either have a correction on top of it and then get continuation to the upside, or we just plow right through it. I'm not sure which one we're going to get. We're going to discuss that on the smaller time frames, but this is what we're looking for. Break that trend line, either continue to the upside to all-time highs. I'm not going to give my targets as of right now, but it's pretty high. But as of right now, we're just focusing on these smaller time frames. So keep an eye on that area there, the 38.23. We've been tracking this for quite a long time. Played out the moves pretty well, done well within the trading of this. So we want to hold that low at 38.23. We're looking for 5 wave patterns to confirm that we are moving to the upside. Now this has been a very difficult count, if you remember, but we did get the directions correct. I believe we hedged from the top. We got these lows, hedged from the top. We got this move here. Didn't make as much as I'd like, but we've done pretty well in this area. So since the low, we had a wave 1 and 2. Wave 3 got extended to the 2.618 extension. We got a triangle for our wave 4 and our 5th to the upside. This is the area right here for this wave 2, labeled as an ABC, that has been a little bit suspect because of how fast it sold off. We want it to take about 618 to 1:1 in time. That's where the right look comes in Elliott wave. But the reaction after leads me to believe we might actually just continue from here, making not ideal patterns again, but not invalidated. Now, I looked at this a couple different exchanges. Some made double tops, some made slightly higher. This one doesn't have that, but I want to show you my most bullish scenario. And that is that we got a short wave 5 here, triangle 4, and this is a 1-2-1-2. Now, I'm leaning to this pattern, even though it's not ideal, just because of how fast it happened. You can see we actually recovered quicker than the move to the downside. This was a very fast sell-off, very fast buy up. Basically like a V bottom, right? A couple of other things. I don't trade this method, but I pay attention to these certain patterns because I know other people do trade this way. So if we have a count that says we could get a 3rd wave, for example, this move to the upside as a 1-2-1-2, and I see other trading methods I know are out there that would confirm that pattern, I do give it validity. And that is that you can see potentially a head and shoulders. Again, I do not trade based on these patterns, but if I have a count that would go along with the people that do, that's another trading method going in the right direction, right? So that's just one thing to pay attention to. I do not trade that method, but I'm aware that people do. That's the important thing. Okay, so if this is a 1-2-1-2, if you watch my videos, you know we look between the 618 and the 1-1 extension of the first wave 1 and 2. We're right in that zone, the 618 and the 1-1. Again, not an ideal count. We have basically a double top for our wave 5, but in this case we had a wave 1, 2, ABC, got a shy retracement between the 382 and the 50 of the second 1, 2. Now, if this holds, that's quite bullish because that's quite a shy retracement. But the fact that we were coming off the end of a triangle, it wouldn't surprise me because we're expecting thrust, right, at the end of this E wave. So it wouldn't surprise me whatsoever. Again, when we were tracking this, we were expecting the extended 2.618. It didn't surprise us, right? So this is what I'm looking at. Again, very ugly patterns, but if I were holding this, not trading advice, you make your own decisions. But if I were in this, what I would do is, if this is a 1 and a 2, obviously we can't come below that wave 2. So if you're playing this as a wave 3, that should be your absolute stop low, because that would invalidate this as a wave 1 and 2 complete. We would need another move to the downside, if not complete, right? So you can use your rules and guidelines. If you want to tighten your stop even more, if this ends up being some nested 1-2s, you can also use the 618 of the last wave move to the upside. So you can pull your Fibonacci levels from this area, ride just past the 618, right? A lot of times I use the 0.7 or the 0.66, one or the other. All depends on how you want to trade this, because there is the possibility that this is just an A wave, right? And we're making some sort of flat. In that scenario, you want to at least protect your profit if you're in. So that's my most bullish scenario. And again, it's not pretty, but I've seen this play out many times over the years in crypto, and that's just a bunch of nested 1-2s till eventually you get that pop, right? It's like just quick moves, quick retracements, and you just keep chopping your way up, right? Almost like a staircase. Boom, 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 gone, right? But these are very difficult to read in real time, nested 1-2s. I don't like doing more than 3 myself, because then it tends to be more corrective, I find. Overall, if you have more than 3 within like one little area like right here. So let's talk about the alternative. We talked about this previously. And that would be that we're within the middle of a flat. Now, in this scenario, again, we can make this move to the downside, get a connecting leg, and then make another 3-wave up, and then get our 5-wave move down. The way this would play out is a 3. This would be a complex WXY, most likely double zigzags, ABCX, ABC, and then we get our 5-wave move down, creating a larger pattern, looking for that connecting leg where C equals A. And then we continue to the upside. This is a very bullish pattern, but it's important to note as if this X wave is complete in that scenario of the flat scenario, again, we should hold this level. So the only way we should drop any lower is if we still need a Y wave, and this is some sort of WXY. So my bias is heavily to the upside in either this B wave as a flat or the 1-2-1-2. That's why I would be riding this, but running my stop as like a trailing stop, at least at the 66 of the entire move. You can make your decisions any way you like there. But we are past the 618 retracement of the move to the downside, so that does switch probabilities to the upside. But there's always flats. That's always the issue, right? So you can pay attention to what the count is up in this area. See if we blow through our B wave area, which is between 72.76 and 77.38. If we just blow through that, invalidate at the 1.618 for a B wave, 85.48. Or you can even hedge in this area, which just means around that 1.382, you go short the same amount you are long, and then that whole area you're neutral, and you can close your short above that 1.618 for invalidation, right? Again, not financial advice, just trying to give you a little bit of tips to use the rules to your advantage. So if we do get this move, and it is a 1-2-1-2, where does that put us? Well, standard Elliott wave targets, the first wave 1 off of wave 2. We would expect our third wave to come to the 1.618 extension of wave 1 off of wave 2, which is at 104.13 on log scale. That would be our first third wave target. Now, if this ends up being nested 1-2s, even here, 1-2-1-2, again, I have no idea. I won't know until this resolves. I'm just biased to the upside because most counts push to the upside. So I'm fine being in a position, not quite knowing the count and just letting it do its thing until it becomes a little more clear to me, right? But if these are somehow nested 1-2s, there is even the potential, like we did in this first wave, to actually come to the 2.618 extension for this third wave, which is all the way up at 179. So that depends if these are nested 1-2s, or if we're just going to get a regular impulse. I'm not sure. But I would be a little bit concerned in this area. I'd really want to make sure I have a good wave count up in this B zone in case we do get that C wave to the downside. I've mentioned this many times. I usually just hedge in those zones, get as close to that 382 as I can, and then close that hedge above that 1.618 unless I have a really good count to go off of. You can see it looks pretty good. If we can get through this zone and break through this, that's our downtrend line of that triangle, we could really get going. Or do we come up and retest it as that C wave and then go, right? Won't know until it happens, but my bias is heavily to the upside in both scenarios. Again, the only thing I see here, I don't see anything bearish at the moment whatsoever, just because of the speed of that recovery, how deep we've come. The only bearish move I see is maybe one more wave down just to make a partner leg here, and then we just continue to the upside. I really don't see a bearish scenario at this current level without making new highs first. All right, I can always be wrong, but it looks heavily biased to the upside. All right, guys, that's it for XRP. Thanks for watching. I'll see you on the next one.